Hello, everyone. This is Clay Chase with Torrey Hills Capital. Welcome to the Taseko Mines non-deal roadshow for January 5th, 2023. I trust and hope you're all well and you had a great holiday season, and wishing you all a great New Year's for 2023. I'm hoping it's going to be a good one. So far, some of the markets are starting to come back pretty good, especially in the metals, which we like to see. So I have a really good company for you today. Some of you have already probably seen them, but this is every time we come in and talk with this group, I think it's just the perfect time to see them. And I think every time we get a little closer to that perfect time, and I think we're very close to that right now. They had a major announcement we'll talk about here that they had in late December, which I think is really key to the company's future growth going forward. And for those of you who are new to the Taseko story, it's a copper producer. They're very, very well positioned to take advantage of this recent rise in copper prices that we've all been witnessing. Copper's currently around $3.80 a pound, which is more than double where it was, say, right when the pandemic started. So it's really had a big move. It was up even higher than that, say about I think 9 months ago or something. It was close to $5, but it's come back a little bit. And there's a few reasons for that. We'll talk about some of the macroeconomic forces that are moving the copper price around. But I think overall, if you go out to the market and poll a number of the prognosticators who talk about metals, they all believe that copper is in for a very bright future because of the supply and the demand components of the metal. There's a lot of the mines that have been prolific copper producers for the past 10, 20, 30 years. A lot of those big mines are getting to the end of their road. You're seeing a lot of the depletion of supply and production destruction, and that's the key to where copper's going. The other side of the coin is the demand, of course, and that's ramped up considerably with the electrification of the transportation grid, as well as the electrification of some of the power generation that we see out there from wind and solar, as well as all the charging stations that go into the batteries of the cars and things like that. So a lot's happening in the copper market. If you're not fully up to speed on it, this is a great place to find out more, because we'll talk about the copper market as well as the fundamentals of the company that we're meeting with today, Taseko Mines. Following today's presentation, lasts about 45 minutes. We'll have a short Q&A session. If you have a question during the presentation, feel free to ask. You can do that by either clicking on the Q&A icon on your taskbar. You can also click on the chat icon. You can raise your hand, and we'll see that, and we can turn on your microphone so you can ask the question directly during the call. Following the call, I'll send you a very brief questionnaire, kind of a feedback survey. Please get that back to me as quick as you can so we can get it back to the company. Okay, let's get started. Taseko Mines is a mid-tier copper producer. Their primary operations are in British Columbia, Canada. Their flagship Gibraltar project is Canada's second largest open pit copper mine. They also have another project that's getting ready to ramp up right now, and that's the news they just had in December. It's on their Florence project down in Arizona. It's a different type of project. It's not really open pit. It's an in situ project. We'll talk about the differences and the advantages. It's a very low cost producing type of production, and it's going to add a lot to their bottom line when they get that up and running. And they're just about to the starting point for that project. It's very short build time as well. So it's an exciting time to be looking at Taseko. Taseko also has a strong portfolio of additional projects that are both copper and gold. These are big box projects that they look to get into over the next 5 years plus, something like that. So there's lots of future growth for Taseko with this pipeline of projects that they already own, which as copper gets more and more expensive, those projects get more and more valuable, as I'm sure you can imagine. Taseko trades on the New York Stock Exchange, NYSE, Amex, under the ticker symbol TGB, and the TSX main board as TKO. Currently, shares are trading in the U.S. market around $1.53, gives the market cap of the company about $440 million. Today, to discuss Taseko's operations is the company's VP Investor Relations, Mr. Brian Bergot. Hi, Brian. How are you today?
Good morning, Clay. I'm good, thanks. Happy New Year.
Great. Happy New Year to you as well. Okay, let's get right into it. I'm going to go ahead and stop sharing my screen, and that way you can put your PowerPoint up, and then we'll be all ears for the presentation.
See it there?
It looks great.
Okay. On to me.
Sorry?
Okay, sorry. Well, thanks everyone for taking the time this morning. For those of you who have sat in on these before, a bit of a review and a refresher. And for those of you who are new to the story, hopefully I'll give you a good overview of who Taseko is. Yeah, it's a very exciting time for us. As Clay mentioned, we had some big news regarding our Florence project just before Christmas, so we'll walk through that. Overview about Taseko. The two main assets we're going to speak about today is our Gibraltar mine, operating mine in British Columbia. Will produce second largest open pit copper mine in Canada, fourth largest in North America. Has a 22-year mine life remaining and will produce about 130 million pounds of copper per year for the remainder of its mine life. We own 75% of Gibraltar, so about 100 million pounds of copper to our account annually. Very large scale, mature mine, steady state operator. So it's been our cornerstone asset really since it restarted in 2005. Our near-term growth asset is our Florence Copper Project. It's in Arizona, about an hour out of Phoenix, and we are waiting one final permit from the EPA before we start construction on that project. So hopefully we'll be breaking ground down there within the next 6 months. ESG is very important to Taseko, right from our CEO down to all our employees at the mine. We have very strong safety and environmental track record at our Gibraltar mine, which we will look to replicate down in Florence once we're in production. Most of our assets are copper-based, and we have chosen copper because we believe in the fundamentals. As the world transitions to net zero and decarbonization, copper is a fundamental commodity needed for that transition. We've got the team in place to continue to operate and to grow Taseko into a multi-asset company. Most of our senior team are technical mine engineers, and so we've got the experience from operating our Gibraltar mine, and we're using that to develop our Florence Copper Project as well as our other projects. As you can see, we are North American based, and really just in British Columbia and Arizona. You won't see us making acquisitions in South America, Africa. We like the North American jurisdiction. Sometimes it can be a little challenging up front during the permitting stage because of our strong laws here in North America. But we have rule of law in North America, so we don't have to worry about the government stealing our assets. So yeah, we like our North America operating jurisdiction. We have a very strong balance sheet. We'll talk a little bit about that, but we manage our balance sheet very conservatively. We have significant cash on hand. We do have some debt, and we'll talk about why we have the cash on hand, what the use of that is. We may have some time to talk about some of our other assets beyond Gibraltar and Florence, but as you can see, we've also got our Yellowhead Copper Project in British Columbia, a very large-scale open pit project in BC as well. New Prosperity, which really was the original asset of Taseko back in the 90s. We'll touch on that and where we're at there. And then we've got a niobium asset in British Columbia, northern BC, our Alley project. We're not doing a lot of work on that these days. We're following the niobium market, which is a very niche market, quite small, dominated by one private company in Brazil. But there are some interesting things happening with niobium right now. There's a lot of research going into niobium as a battery metal, to actually replacing the graphite in batteries for very quick charging. So we're following that, and yeah, we may have an opportunity to do something with that asset here in the next couple of years. So that's Taseko in a nutshell. A little bit about our capital structure. Yeah, as Clay mentioned, our market cap today is about $440 million US dollars. Our 52-week high, we were traded as high as 240. That was earlier last year, and as low as 89 cents. So we're up from the lows from earlier this year. And yeah, we've actually, our share price has been fairly strong over the last 6 months or so. And that's when the price of copper sort of retracted from the $5 level. At the end of Q3, which was the last quarter we announced, we had 140 million Canadian, or roughly 100 million US cash on the balance sheet. We've got an undrawn $50 million US revolver, and we do have some debt on the balance sheet as well. We've got a $400 million high yield note, that's US dollars, pays a 7% coupon. We refinanced that in 2021. It's a 5-year note, so not due until 2026. And it does trade, today it's trading about 90 cents. And if anyone has any questions as we go, feel free to jump in. We are covered by the standard Canadian banks in terms of research coverage, most with a buy and good return to share target price. And our equity is widely held. No controlling shareholders, as you can see. Our largest holders under 4%, and actually a significant portion of our share as well. Probably about 10% of our equity is now held by ETFs. And you can see our second largest holder is the actual iShares Infrastructure ETF, which is a US ETF. Management and board as a group are about 3.5% of our outstanding shares. So a little bit about copper, why we focused on copper, why we believe in the fundamentals. The price has come off its highs. It got up close to $5 earlier, or in 2022, last year. And it's come off those highs, and the equities traded off with them. But today we're sitting at about 380 per pound, which is, if you'll go back just a couple of years, 380 per pound was a fantastic price. But when you come off $5, it doesn't seem like such a great price. But we're very happy at today's price. Us and most others can generate strong cash flow at 380 per pound. And really, if this is the new trough pricing going forward, then who knows where the next peak pricing is. Why has it come off? Well, it's like a lot of commodities. There's concerns about the global economy, inflation, issues in China, whether COVID related or economic related. And a lot of those things all drove sort of the pullback in copper pricing earlier, or last year. Keep forgetting it's 2023. And then also the US dollar strength. Copper price is always quoted in US dollars. So with a stronger US dollars, typically you will see a weaker US dollar price. But we believe in the fundamentals, in the long-term fundamentals, and even the medium term. And this is almost unanimous across, all pundits and experts in the area. And why is that? Well, again, copper is a fundamental commodity needed for the world to meet its environmental goals, to moving to this net zero emissions. It's such a critical metal to achieve the global targets. So we have demand growth from this move to electrification, but where the crux of it is supply. We've got a couple of large mines starting up now and in the next little while down in South America. You have Anglo's Quellaveco mine in Peru. You have Teck's big mine in Chile, QB2. But beyond that, there's not a lot of large-scale mines that we see and that the experts see that can start up in the next few years. And the one thing we know today, it takes anywhere from 16 to 20 years to build a copper mine. That's from finding it, drilling it out, going through all your feasibility studies, and you got to permit it, finance it, and then you got to build it. And so we can look out with good confidence, 5 to 10 years, and see which projects are in the pipeline that can be built. And those projects aren't there, not nearly enough to keep up with the type of demand that people are talking about. In addition to that, you look at the large mines in South America, specifically Chile. They are aging, they're mature mines. The grades are on the decline. And, Codelco, which is a large producer in Chile, they've talked about needing upwards of $40 to $50 billion just to maintain production at those mines over the next 5 to 10 years. That's what they need to invest to maintain production, not grow, just maintain. And then you look at the geopolitical issues, whether it's in Chile, whether Peru, the DRC, and those three areas alone account for a significant portion of global copper supply. And we continue to see disruptions, whether it's Peru with villagers raiding Las Bambas, shutting it down for weeks at a time, which happened 3 or 4 times last year. And those issues don't go away overnight. Those are long-term issues that are yet to be resolved. Just this morning, it was announced that November production from Chile was down 7% year over year. And that's a big drop considering the large the supply base out of Chile. So, there's a lot of issues and concerns about the supply side. And when you factor that in with the growing demand, we just don't see how we don't move into a deficit here over the next 12, 24, 36 months. And that deficit will only drive copper pricing higher. S&P Global did a large study last year, about 6 months ago. And they looked at how copper fits in with the move to electrification. And the real issue, or the real, what came out of their study is for the world to meet its environmental goals, copper demand will grow by double. Will go from 25 to 50 million pounds by 2035. That's only 12 years away. And as I mentioned, the projects needed to keep up with that type of demand growth aren't there. So that will drive copper pricing higher. And the one thing about copper pricing, it is very elastic. Dollar increase in copper price to a car adds a couple $100. That's easily passed along. Same in a house, adds $1,000 to the price of a house. That can be pushed along. So yeah, we are very bullish on the future. And it's not really the long-term future. It's not that far away. EVs, obviously, this is what we see every day. This plays a role in this move to electrification and increased copper demand. But it's not even the EVs so much, even though an EV takes about 4 times as much copper as a combustion engine. It's really the infrastructure that's needed to charge these vehicles. Everyone who has one wants to have a rapid charger at their house. I'm not sure what it's like, but in Vancouver and BC, every new hotel, every new condo has to have, or every new mall has to have EV charging stations. And these are all rapid chargers, and they all take significant amounts of copper. And beyond that, the infrastructure to move the electricity to those charging stations all needs to be upgraded. So we're very bullish, and we'll continue to focus on copper as we build Taseko into a multi-asset producing company. So let's focus now a little bit on our assets. So we'll start with Gibraltar, which is our producing asset. As you can see there, Gibraltar is an open pit copper mine. We do also produce molybdenum. We'll produce about 130 million pounds on average over the remaining 22 years. Cash costs at Gibraltar are about $2 per pound. That's a life of mine average. Today, we are running a little bit higher, and the main reason for that is because of diesel prices. With the higher oil prices, it pushed diesel higher, and we use a significant amount of diesel in our haul truck fleet. We have today, I think we've got 27 haul trucks, so we've got 26, we have one more coming. So 27 haul trucks, and they burn a lot of diesel. So the higher diesel pricing is adding roughly 20 cents per pound to our cash costs. To produce or replace Gibraltar today would be well in excess of $1 billion US. So a little bit of history. We bought Gibraltar in 1999 for $1. The previous owners had just shut it down and they were actually going to scrap it. The price of copper was 80 cents. Gibraltar was built in the early 70s, and when we bought it in 99, it was a tired, worn out asset. So we bought it in 99, kept it on care and maintenance through 2004, and the price of copper moved higher towards the end of 04. So decided to fire it up on a shoestring budget with the expectation we could generate cash for a year or two, with a high copper price of $1.20 at that time. And then the price of copper would cycle back to below $1. We would mothball it and, just generate a bit of cash for a couple of years. Well, the price of copper didn't cycle back. It continued to move higher. And in 2006, we decided we could justify some expansion and modernization activities here. Well, that ended up being a 7-year, $800 million project or multi-phase project. There's 4 phases to that build out. And we finished that in 2013. And we took the mine or the milling capacity from about 30,000 tons per day to 85,000 tons per day, or about 50 million pounds of annual production to what it is today, 130 million pounds. Financing that $800 million, we operated through that whole period and generated cash because we had strong copper pricing through that period. In 2010, we sold 25% of the mine to a Japanese consortium, and that was for just under $200 million. And then in 2011, we took out our first high yield note of $200 million. And that funded that whole expansion projects or those expansion projects. Today, Gibraltar's got in excess of $1 billion NPV at conservative copper prices. And as I mentioned, we have a long-term, we still have 22 years of mine life. We increased the mine life earlier, about a year ago, from 16 years to 22 years. And, we are doing some exploration at Gibraltar, so there's a good chance we'll be able to expand those reserves even further. So we've been operating steady state at the higher level since 2014. If you look at that graph there, it looks like production has tailed off in the last couple of years. That's not a trend that will continue. We've been cycling through a lower grade section of the ore body. In 2023, we see that turnaround as we move back into higher grade. Talked a little bit about ESG. Our safety track record at Gibraltar is second to none. We've won the Safest Mine Award in BC 6 out of the last 8 years. We have a very strong environmental track record and won many awards there as well. So it's a great asset. It's been a cornerstone asset for us. We've taken all the cash we've generated from Gibraltar and used that to develop our pipeline of projects. A little bit about, more of the recent results. You can see on that graph, we've been generating strong EBITDA from Gibraltar. It did tail off in Q3, and that's really a function of the copper price. As you can see, the copper price trended from its peak average, which was in Q1 of last year, and it's tapered off a little bit. In addition to that, 2022 was a tough production year at Gibraltar. We had some struggles operationally, and what that's a result of, we moved into a new pit earlier, about a year ago, and we've been struggling with a bit of mining dilution, which lowered the average grade we've been processing to below what we were expecting to process. We're still working through that a little bit, although we've made good progress, and over the next couple of months we should see that mining dilution. We should solve that mining dilution issue and get our grade back up. So we should see a strong rebound in copper production in 2023. And with copper pricing staying at this sort of, where it's been trading over the last number of months, sort of between 360 and 380, we should see our EBITDA generation increase over the coming quarters as well. So that's Gibraltar. Really what Gibraltar, as I mentioned, it's been the cash flowing asset for us. Don't need any excitement there, just need it to do its thing. And really the excitement for us and where we see the excitement is from our Florence project. So Florence is an in situ leaching project, which we'll talk a little bit about. We will produce 85 million pounds of copper cathode, as opposed to at Gibraltar, we produce a copper concentrate, which is about 28 to 29% copper, which needs to go to Asia for further refining. At Florence, we'll produce 85 million pounds of 99.99% pure copper cathode. No further refining is needed of that product. It will stay in the US domestic market, which are, in the US market is importers of copper cathode. Cash costs at Florence will be about $1.10 per pound. As I mentioned, Gibraltar's about $2 per pound, so it's almost half the cash cost of Gibraltar. And again, we have a long mine life at Florence of 21 years. Our feasibility study goes back to 2017. That contemplated that's the 21-year mine life. Upfront capital to build Florence is $230 million. And actually that number was updated in 2019. So very low upfront capital in addition to the low operating cost of $1.10. And that generates after-tax NPV of $680 million, nearly $700 million US. At very strong economics, 37% IRR and 2.5-year payback. And that's at 350 copper. And so just, we're at 380 today. So if this were operating today, it would have, the economics would be even that much better. So we actually bought this asset in 2014. It was actually a BHP asset back in the 90s. They did a lot of work on this, but walked away really from the copper business because of 80-cent copper. They didn't see a future for copper then. So we were able to get our hands on it for about $70 million. And we've been working on it since then. So why is it so low upfront capital costs? It's one of the lowest capital intensity projects in the world. And it's one of the lowest it's the first quartile operating costs. And why is that? And that's because of the in situ recovery method we're going to use. So we're not digging a big hole in the ground. We don't need a fleet of haul trucks and shovels. What we're going to do is we'll drill a well field. We'll inject a solution through injection wells. As that solution migrates through the deposit, it leaches out the copper, and then we draw that solution up through recovery wells. That copper-bearing solution or pregnant leach solution will go to a conventional SXEW where we strip out the copper. It's a fantastic process, and it hasn't been used extensively for copper because copper is typically found in hard rock. Like at Gibraltar, we need to blast the rock, then we need to haul that rock and crush it and then grind it to get it down to a size where we can get the copper out of it. At Florence, Mother Nature's done all this work for us. It's a highly fractured, rubbleized deposit. The ore it just crumbles in your hand. So it makes this project amenable to in situ leaching. So while in situ leaching hasn't been used extensively for copper, it's commonly used for uranium production. About 40% of global uranium uses in situ leaching. So it's not a new process. We're just taking what's used for uranium and using it at our deposit here. So the benefits of in situ leaching, you can see on the graphs there. It is, from an environmental perspective, it's a very good way to extract copper. 93% less freshwater use, 71% less energy use, and most importantly, 83% less carbon emissions. As I mentioned, we're not digging a big hole, so there's no permanent use of the landscape. When we're done here in 22, 23 years, you could turn this site into a golf course, a residential area, you name it. While we're operating over the 21 years, no one would even know we're there. There's no blasting. There's no big industrial equipment. It's a very low impact form of mining. So where we're at, because this process has not been used extensively for copper, we made the decision to build it in 2 phases. So the first phase was a production test facility. We had to go through a whole permitting process for that test facility. And for this process, there's 2 key permits that are needed. One comes from the state, and that's an aquifer protection permit. And one comes from the EPA, and that's the underground injection control permit. So we went through a whole permitting process, and we got our final permits in 2017 for the test facility. We built the test facility, which cost about $25 million. And then we operated that in 2018 and 2019 for 18 months. And while it was smaller scale, we still produced 1 million pounds of copper. And why we built that test facility was, one, to prove to the regulators we can operate this process and protect the environment, that we can control those solutions 1,000 feet down, and 2, to prove that this process, this technology will work at Florence. And both of those were proven. We did prove to the regulators that there was no issues. We operated within the strict guidelines of our permits. We had no permit exceedances. And we also proved that this process works. As I mentioned, we produced over 1 million pounds of copper cathode, 99.99% pure copper cathode. And we did that over 18 months. And yeah, it was very much a success. So we wrapped that up in 2019, and then we needed to amend those 2 key permits for commercial production. So the state went through their process in 2020. And in December of 2020, the state issued us a final permit, a final aquifer protection permit for commercial production. So we have one of those 2 key permits. The other permit from the EPA, the EPA started their process in 2021. And in August of 2022, so about 6-7 months ago, the EPA issued a draft underground injection control permit. That started a 45-day public comment period, which concluded on September 29th. In that period, they also held a public hearing. Comments received, and at the public hearing, overwhelmingly support this project moving into commercial production. And most of those comments came from the local town, but also from state politicians and other politicians and other folks outside of Florence, the town of Florence. So we had overwhelming support during the public comment period. So that wrapped up in September, at the end of September. And now what the EPA is doing is they are preparing responses to certain comments that were received. We don't know how long this will take, but based on, we've seen the comments that were received. We don't believe there's any comments that should cause any issues, or there's no comments received that we believe will cause any issues. So we are expecting sometime in the next 6 months that the EPA will respond to those comments and issue a final permit. And we are anxiously awaiting that final permit because everything else is in place for us to move into construction. A little bit about financing the $230 million. So where we're at there, we've already spent $80 million of that $230 million. So roughly a third of the project spending is complete. And that's on the long lead items mainly associated with the SXEW plant. Now on the remaining capital, we know there's going to be some inflation given the current environment. And what we've told the market is we will formally update the capital, the CapEx number before we start construction. So sometime in the next 3 to 4 months, we will update that number. But because of the type of project and the relatively small capital number, we don't expect it, we expect it to be a very manageable increase. And, we don't think it'll change the economics that much, especially given the higher copper pricing today, offsetting a lot of, or most of the capital cost increases. But we'll formally update that number. So how are we going to finance that? So we've already spent the $80 million. So we have somewhere probably between $160 to $200 million left to spend, assuming some inflation. We've got $100 million US capital cash in the bank today, or at the end of September. We've got our $50 million US undrawn revolver. So the other big news we announced just before Christmas, which we spoke about, is we've done a deal with Mitsui USA, and they are making an initial investment of $50 million US for a stream for 2.67% of the copper. Now, they also have an option to invest a further $50 million, a total of $100 million, and convert that stream to a 10% equity interest in that project. So that implies a value of that $100 million for 10% implies a value of $1 billion for Florence. And that's what we've been telling the market for the last number of years, that this project is worth, a significant amount, especially relative to our market cap. And the other thing that this deal with Mitsui does, it's that third-party validation. And you can trust me that they did an extensive due diligence process on both the permitting and the technical aspects of this project. They're not going to cut a big check like that if they haven't done, their due diligence, and they did it. So we're very excited about that. So that gives us an additional $50 million up front to build this project. We're looking at another smaller financing, which I think, we'll probably have something to say not too long. It'll probably be in the form of a mine equipment financing. Typically mine equipment financings would be your shovels or your trucks, but obviously we don't have them at this project. But we think there is some interest in financing the SXEW plant, which would be smaller, in the 20 to 30 million, but again, an additional cash to build the project. And with, if we can close on a deal like that, then this project is effectively financed when you include some cash flow from Gibraltar. So we need one final permit from the EPA. And again, we've gone through the whole public comment period. There's been no issues arising from that. So we just need the EPA to issue the final permit, which we are expecting in the next 6 months or so. And then we are ready to move into construction. Construction of Florence is 18 months, and that's really from final permit to first cathode production, because it does include about 3 months for commissioning and pre-leaching operations. So it's a very short construction schedule, very straightforward. We're in Arizona, so there's no weather window. You can build year round. So yeah, we're very excited about moving this project forward. It just fundamentally changes Taseko. It gives us a second operating asset. Even though not quite as large a copper facility as Gibraltar, it more than doubles our cash flow because of its low operating costs. So yeah, we're very excited about it, and we are, very close to realizing significant value from this asset. So we'll talk a little bit about a couple of our other assets, which I mentioned earlier, and then we move into some Q&A. So Yellowhead, this project's in BC. It's only a couple hours from our Gibraltar mine, and this would be similar scale to Gibraltar. It will be a large open pit copper mine. You can see there it'll produce 180 million pounds of copper per year over a 25-year mine life. So not quite double Gibraltar, but upwards of that. Very good, it's not too far off the highway. Infrastructure is very close. So it's a great project. And we actually bought this in 2019 for only $13 million. So where we're at with this is we're preparing to start the environmental assessment, the BC environmental assessment process. In advance of that, we're working with the local Indigenous community in that area. And really what we want is to get their support for the project before we move into the EA. And we've been working with them now for, I guess, the better part of 2 years. And I think all going well, we should, move into the environmental assessment process sometime in the next 6 to 12 months. So we'll continue to move this project forward. We don't need to spend much money on it through the EA process. And that EA process is anywhere from 3 to 4 years away. So, this project won't be construction ready for another 5 to 6 years. At that point, Florence would be up and running and operating steady state, generating cash. So the timing of this project is very good for Taseko. And again, this would be a complete game changer, almost doubling our production again. It's a great project in a great area, and synergies with Gibraltar because it is only a couple hours from Gibraltar. New Prosperity, for anyone who knows the history of Taseko, they'll know about Prosperity. As I mentioned, it was the original asset of Taseko back in the 90s. This is all we had. Actually, we had a $25 share price at one point based on this project alone. It's one of the top undeveloped gold copper projects in the world. You can see there 8 million ounces of recoverable gold in reserves and 3.5 billion pounds of copper. I think in the resource, there's, I think it's 13 million ounces of gold. It's a huge deposit. Again, in a great area, not too far from Gibraltar. But this project's been stuck in permitting legal challenges really since 2014. What's changed here is the provincial government has brought us together with the Indigenous groups in this area and with the goal of finding a path forward for this project. And we've been at the table for 3 years now with facilitated dialogue with the provincial government, trying to find a resolution to our differences and a path forward. The contents of these discussions are confidential, but I can say, we wouldn't continue extending these conversations, these discussions, if we didn't think there was a path forward and we could, we're going to find some common ground. So I'm not going to wave my arms and tell you go buy the stock because there's going to be a deal done here. But this is such a valuable asset, not just to Taseko, but the provincial government, that I think we will find some success and there will be a path forward discovered for this project in some form, fashion or another.
Hey, Brian.
Yeah.
We had a quick question. Sorry to break in on you like that, but it was a question about the ownership of the Mitsui. And the question is Mitsui part of the 25% owned portion of the Gibraltar project?
Very good question. The answer is no. And the main reason, as I mentioned, Gibraltar produces a copper concentrate, which needs to go for further refining. So our partners at Gibraltar are two smelter groups, Dowa and Furukawa, in addition to a Sojitz, which is a Japanese trader. And Dowa and Furukawa became partners because they wanted long-term access to the copper concentrate. So they get 30% of what we produce. They don't get it. They have access to 30% of the copper concentrate or the copper we produce at Gibraltar for their smelters in Japan. At Florence, we're producing a 99.99% pure copper cathode. Mitsui is a very large cathode trader in the US. And so they are looking for the offtake, the copper cathode to trade in North America. So both groups, there are two separate groups, and it's mainly because we produce separate types of copper at both assets.
I saw that was one of my questions too, is the Mitsui offtake that's like an 80-something%. So are they committed to taking that much? And do they take it at a kind of a market value, or do they get a discount? I know they already have a stream. Could you tell us more about that, or if you can?
Sure. So there's lots of different parts to the Mitsui deal. In addition to the stream, they get 81% of the offtake, and by saying they get it, they pay us for 81% of the copper, which they can market. Well, they can market wherever, but they will market in the U.S. There are certain discounts for marketing and transportation logistics, and they're just in line with industry standard. If or when they convert exercise their equity option to invest a further $50 million, then the stream goes away, the 2.67% stream goes away, and also the offtake agreement will turn into a marketing agreement. And so I guess I should have talked a little bit more. We talked about the environmental benefits of Florence, and Mitsui is a very large copper trader in the US, and they have very strong marketing channels. And one of the things we want to build is to get a premium for our green copper. And one of the reasons we chose Mitsui early on and focused on doing a deal with them is because of their strong marketing channels in the US. And we think they can really develop a market for green copper. So that's sort of another aspect of the deal with them.
Is that a commitment or is that an option? I mean, is it not a take or pay, right?
It wouldn't be a take or pay.
Yeah.
But we fully expect them to exercise that equity option.
Okay. So that'll probably be a moot point at some time. Got it. Okay, great.
So a couple wrap-up slides here. Copper reserves for a copper company, that's what you build a company with. If you don't have extensive reserves and large mine lives, it's really difficult to build a copper company. So if you look at what Taseko has, we have nearly 15 billion pounds of copper in reserves. On a per market cap basis, that's almost 30 pounds for every dollar of market cap. And we're sitting here with a $600 million market cap. Capstone, their market cap today is 3.5 billion, and we have more copper reserves than them. Hudbay has a similar market cap to Capstone, and again, Oz Minerals in Australia was just acquired by BHP for $8.5 billion, and we've got over 3 times more copper reserves than them. So it goes down the list. All of our out of all of our peers, we've got more copper in the ground than any of them. And we've made the decision a long time ago that we want to buy earlier stage or advanced stage, but not operating assets, and try and develop these assets to generate value, create value for our shareholders. It takes time, takes patience, takes a lot of effort on for us, but we still think it's the best way to create long-term value. Some of our peers have gone out and done major acquisitions where there's 600 million or $1 billion. We've stuck to smaller, manageable acquisitions. And like I said, it just takes patience and a lot of effort on us to develop these from feasibility study level, move through permitting, and then build them. But again, we still think this is the best way to create long-term value and the best value for our shareholders. And it starts by acquiring these reserves inexpensively, which is what we've done. And then finally, to me, this graph on the top right, it's the real value proposition. We've got all these assets. Gibraltar's got $1 billion NPV, or a little higher than $1 billion NPV today. And this is Canadian dollars now. Florence NPV in Canadian dollar terms is 850 million. So you take away our net debt of about $350 million, leaves an implied equity value of those two assets of $1.6 billion Canadian. Relative to our $500 to $600 million market cap, there's over $1 billion gap between that equity value and our market cap. And that really is Florence. We get very little, if anything, in our equity for Florence. And it's been like this, from the day we acquired it. People said, well, you're not going to be able to make this project work. Well, we built and operated the test facility to prove we could. People said, you're not going to even be able to permit the test facility. Well, we did. You're not going to be able to permit the commercial facility. Well, we've got our final permit from the state. We are so close to having it from the EPA. We've gone through the public comment period with no issues. So, we believe we're right on the cusp of realizing significant value for Florence in our equity. And, like I mentioned, it's such a big part of the story. It's, gives us that second operating asset. It reduces our overall cash costs, our consolidated cash costs, and it more than doubles our cash flow. And you're not paying anything for it today. And that's not, in this isn't even included Yellowhead or Prosperity or Alley. So, there's a very large valuation gap. We're working very hard to reduce that gap. When we announced the Mitsui deal a few weeks ago, we did see a good bump in our share price. And I think there's a lot of people, and I've heard this a lot over the last years. People really like the project. They like the company. They think we're doing a great job, but they want to see, how we're going to finance it. Well, we've pretty much answered that question. They want to see how permitting is, how we're progressing permitting, and, we've progressed it right to the end. We're just waiting for the EPA to wrap up their process. So, I think there's quite a few near-term catalysts over the next, 3 to 6 months that can really drive our equity higher. So,
I agree. I think the number that really stands out for us on this particular slide, Brian, is the dollar value that they're using for Florence, $3 a pound. If they recalculated that at 380, or what we think where copper's headed in the $4 to $5 handle, I mean that's going to be a big jump in valuation.
Yeah,
I imagine. So there's some conservative nature to some of those valuations there for sure. Great presentation. If anyone has any questions for Brian, we're going to open up the session for any Q&A. I think that my questions were on the Mitsui offtake agreement, and you've given us some of the complexion on permitting, and I know you can't tell us what's going to happen in the future, but could you give us kind of what you think the conventional wisdom is over at your corporate headquarters? Is the timing based on some of the back and forth you've had with the EPA and things like that? Because you're just waiting. You've already had part of it. The draft is done. Isn't there some kind of a waiting period, a certain number of days they have to grant the final permit or something to that effect?
No, there's no timeline for them now.
Okay.
It comes down to them responding to certain comments. We're reluctant to give a real.
Yeah, I understand.
This is not our process, right? This is the EPA's process, and they're going to take the necessary time to ensure that they answer the questions and they don't leave anything. They want to do a very thorough process. And right. Like I say, we believe it should be sometime in the first half. That's not based on what they told us. That's based on, best estimate based on what we know. We have had dialogue with them. They've confirmed that there are no surprises, nothing came up during the public comment period that they didn't anticipate. So now they just need to work through their process.
Sounds good. Well, it looks like you're kind of like at the last mile, as they say.
Oh, I think it's the last few hundred yards of that mile.
A couple hundred yards.
It's been a marathon, that's for sure. We started the permitting process in 2014. So, and this is why the industry is headed where it is, it just takes so long, even though Florence is what this administration talks about needing. It's a very green project. It's producing a critical mineral in the US, but still so difficult to move it through the bureaucracy and advance it. But we've been at it a long time. We're, in that, we're right at we're in the ninth inning and
Finish line.
so close.
Okay. Great. Well, it doesn't look like we have any questions. A very thorough presentation. My closing comments would be, we really have watched the company for some time. They've been a client for a number of years. They've been able to do everything that they set out to do. They've been able to accomplish. It's just a very, very, very well run, very efficient company that makes money and is growing their production base in, I think, an environment of copper pricing that we think could be very advantageous for people who are leveraged into the price of copper here at this level. And I think my other takeaway is that you bought these projects at a time when copper was not most of the projects you've got. When copper was, you've got one project for $1, albeit you had to put money into it. And you got the other project in 2019 when copper was in another big low pricing dynamic. And the projects are all in North America, which I think is another key factor for why people should take a close look at what you're doing here at Taseko Mines, because a lot of these projects that we see, they're great projects, but they're in some pretty challenging places. At 3,000, 4,000 meters in the Andes, or in some of the stands, or places like that, or in Central Africa. Those are, I'd say, some pretty big question marks going forward with some of the geopolitical risks that we see starting to accumulate out there at this time frame. So copper is the lifeblood of industry, of growth, of electrification. It's the common denominator. There's no other substitute for it as well. So if you want to invest in the future, I think copper is a great proxy for that. I think we're going to wrap it up here. Today's code word for everyone on the call is Florence. Again, it's Florence, the Arizona projects that they're getting ready to, that they're hopeful of being pre-construction or construction here very soon. We'll send out the feedback report. Any final comments before we wrap up here today, Brian?
Thanks everyone for taking the time. If you have any follow-up questions, you can contact Clay, or he can put you through to me. Very exciting time for us at Taseko, and we're looking forward to lots of catalysts in 2023 and moving this project into construction here over the next few months.
Great. Well, we're looking forward to it. We'll keep you posted. We'll have you all back on here soon. If anyone has any additional questions about Taseko, to get a copy of this PowerPoint presentation, you can go on their website at www.tasekomines.com. And there's a lot of data in there about the company. Brian, again, thanks. So another question before we wrap up here, or maybe it's a comment. Can you talk to your hedging program for 2023? My understanding is that you had a $4 hedge on Gibraltar in 2022. Good question.
Yeah, very good question. I overlooked that. So we don't hedge per se. We don't sell any of our copper forward, but what we do is we protect the price by buying copper put options. And we've done this consistently really since 2009. So for the first half of 2023, we've actually got a minimum price of $3.75 for most of our production. So we've got copper put options at $3.75. So we are protected at $3.75. We are looking at pushing those out into the back half of this year. And we're waiting for an opportunity, watching the price of these options to come down. It's always trying to find that balance between, what we pay for those options, because we just paid cash for out of the money put options. So we don't want to give away too much margin, but we want as high a strike price as possible. And it's trying to find that balance of cost and minimum price. So, and as those options, the longer dated they are, the time value of money really adds to the cost. So we've been watching the market. We will extend those into the back half of this year. Well, we're looking at it now, and we'll do that as soon as we get a window here, or hopefully the next month or so.
Great. Okay, I think that pretty much wraps it up. Again, thanks a lot, everyone, for coming on today. Wishing everyone a very prosperous and happy new year for 2023. Brian, you as well. Look forward to having you on as soon as possible. This is going to be taped. This presentation was taped. We are going to be pushing it up to our YouTube channel. So if you want to get the link for that, just send me an email and I can get that to you if you have some clients that want to look at this presentation. Brian, thanks so much for coming on today. We'll look forward to having you on real soon.
Thanks, Clay. Thanks, everyone. Have a great day.
You bet. Thank you. Talk to you soon. Bye.